They said the old guard of finance would never open its doors to a figure as controversial as former President Donald Trump, let alone let him waltz in with a flamboyant cryptocurrency product. Yet here we are, watching the New York Stock Exchange itself propose a rule change to list a brand new Bitcoin and Ethereum exchange-traded fund that could send shockwaves through every corner of the financial world. This electrifying possibility has ignited a frenzied debate on Wall Street, throughout the halls of government, and across the cryptoverse. Are we witnessing the dawn of a new era where political clout and digital assets converge in a way we never thought possible? Or is it just another chapter in an ongoing drama that blends power, controversy, and money, all under the ever-watchful eye of regulators? Today, we are going to tear into every angle of this unfolding story, explaining precisely how one of the world's most famous public figures could be on the brink of launching a cryptocurrency product that might rewrite the financial playbook, especially under an administration whose stance on digital assets has been both open-minded and fiercely scrutinized. In this deep dive, get ready to explore how the New York Stock Exchange filed a formal rule change proposal with the Securities and Exchange Commission. An action that sounds mundane but holds the potential to transform the financial landscape. We will uncover why certain aspects of this filing have set tongues wagging about market manipulation and investor protections, what a 75% Bitcoin allocation and a 25% Ethereum allocation mean for the risk profile of this proposed exchange-traded fund, and how a single name, Trump Media and Technology Group, managed to escalate the conversation from a run-of-the-mill regulatory procedure into something that feels epic in scale. Buckle up for an extraordinary journey into the heart of a project that some say will define the next wave of institutional interest in digital assets. Now, imagine the scene. The world's most iconic exchange floor, steeped in history, with that distinctive ring of the opening bell that usually accompanies the listing of a new security. One day that bell might ring not just for a typical stock or a well-known corporation, but for something called the Truth Social Bitcoin and Ethereum ETF, a financial product backed by the same figure behind a platform that wants to rival established social media giants. The sponsor for this initiative? Trump Media and Technology Group, described in regulatory documents as a multifaceted enterprise that dabbles in social media, streaming services, and even fintech solutions. But it is this potential foray into a cryptocurrency ETF that has everyone reeling. You might be asking, what exactly is so startling about this? After all, financial institutions around the globe have been angling for crypto ETFs for years. Some have succeeded with pure Bitcoin funds in other venues. Others are still banging on the door of the Securities and Exchange Commission, hoping to gain approval for similar offerings. Yet, this time around, the sponsor is inextricably linked to a political lightning rod, a man who once sat in the highest office of the United States, known for commanding intense loyalty from supporters and fierce opposition from detractors. That simple fact elevates the entire conversation from a typical business story into a swirling storm of questions about influence, regulation, and profound changes in how investors might gain exposure to cryptocurrencies. The official documents for this proposed fund make a bold claim. The New York Stock Exchange believes the listing and trading of these shares can be conducted in a manner designed to prevent fraudulent and manipulative practices, all while safeguarding investors. This language signals to the world that the exchange is determined to comply with robust regulations that address everything from order execution to the possibility of illicit market behavior. It is a direct nod to concerns at the Securities and Exchange Commission, which, for years, has worried about how to protect the public from the notorious volatility and potential unscrupulousness in cryptocurrency markets. However, behind these formal phrases, we find a compelling narrative. The Times Square-based behemoth of an exchange, which for centuries has been a symbol of traditional finance, is now making a case that digital assets, chiefly Bitcoin and Ethereum, must be taken seriously, and not just lightly seriously, very seriously. Enough to have an exchange-traded product that invests 75% in Bitcoin, widely considered the flagship of cryptocurrency, and 25% in Ethereum, the platform known for its smart contracts and widespread adoption by decentralized application builders. Together, those two assets constitute a significant slice of the crypto market, and by combining them, Trump Media and Technology Group aims to offer a unique product that captures the essence of the digital asset revolution. One cannot talk about this prospective ETF without mentioning the partnerships tied to it. According to the filing, Crypto.com is expected to step in as custodian, execution agent, and liquidity provider. This triple-duty arrangement implies a deep level of trust in the exchange's operational infrastructure. Considering Crypto.com's established brand in the crypto space, its involvement underscores the synergy needed to make the product both enticing and credible in the eyes of regulators and institutional investors alike. Digging deeper, we discover an ambitious plan that goes well beyond a single ETF. The sponsors have teased a suite of so-called America First crypto investment vehicles with unapologetically patriotic branding. We are talking about the America First Bitcoin Fund, the America First Blockchain Leaders Fund, and even the America First Stablecoin Income Fund. If you think this is all style with no substance, hold on. Given the scale of capital-raising operations behind Trump Media and Technology Group, which allegedly reached $2.4 billion at one point, there might be ample resources to deploy. The brand strategy here is brilliantly polarizing. It captures the sentiment of a specific group of American investors who want to see national pride extended into the realm of financial products. Yet critics roll their eyes at what they perceive as shameless marketing. From a purely strategic angle, however, the approach seems poised to gain traction among investors who align with that message. In parallel, it is impossible to ignore the broader geopolitical undercurrents that shape the cryptocurrency landscape. Recent events, including tensions involving the United States and Iran, have demonstrated how swiftly cryptocurrency prices can react to international developments. Over one dramatic weekend, Bitcoin dipped below the symbolic 100,000 mark. Yes, you heard that right. The improbable triple-digit figure that underscores just how far the world of digital currency has come. When that dip occurred, eyebrows were raised in every corner of the finance world, with some proclaiming that the speculative bubble was nearing its limit. But then, in a quick demonstration of resilience, Bitcoin hopped back up to near 106,000, raising the question, is there an underlying strength in these decentralized assets that the world is only beginning to comprehend? Ethereum, meanwhile, followed its own captivating trajectory, hovering around 2,440, a price point that, until a year or two prior, many said was unattainable for the token known primarily for enabling decentralized applications and smart contracts. All of this underscores the intense volatility and unpredictability inherent in the cryptosphere. And that is precisely why some investors crave the semblance of security and oversight that an exchange-traded fund might provide. They are hoping to combine the unstoppable wave of digital currency innovation with the more measured, institutionally sanctioned structures of regulated finance. Before we move on, here is our first friendly suggestion. If you find this story as startling as we do, where private ambitions, politics, and crypto meld into an explosive saga, be sure to support this deep dive. Show some love by leaving a like or a thumbs up. That little gesture always helps us continue exploring edges of the financial universe that others might gloss over. Now, let us return to the tale of regulatory intrigue. The Securities and Exchange Commission, known for occasionally playing the role of the eternal skeptic, is unfurling its complex processes. A proposed rule change by the New York Stock Exchange, under the infamous 19B-4 procedure, is far from a free pass. The Commission typically undertakes a thorough review, calling for public comment, examining the potential for market manipulation, and ensuring compliance with the Exchange Act before it grants approval. It is a gauntlet that many aspiring crypto ETF sponsors have run, and not all have emerged victorious. Right now, the question on everyone's mind is what role personal or political dynamics might play in the Commission's deliberations. The sponsor's bold branding and the imposing figure behind it could magnify scrutiny beyond the norm. Let us talk about the personal stake of the man behind Trump Media and Technology Group, the very person who still casts a colossal shadow over American politics. While details remain sparse, we do know that the company has begun venturing into the crypto realm with more than just empty words. After all, they claim to have raised billions of dollars, some portion of which might go toward building a robust, corporate-owned Bitcoin treasury. That alone stands out, as major corporations have dabbled with placing Bitcoin on their balance sheets. Think of big names in tech, but few have done so under the direct impetus of a political figure. This raises curiosity about how such a move could influence the direction of the entire crypto market if it gets the official go-ahead. And just when you think the story could not get any spicier, there is the matter of Truth Social, the social platform championed by Trump media, which aims to challenge established giants in the tech and social media arena. Clearly, the synergy between a populist media platform and a brand new financial instrument that invests heavily in digital currencies is enormous. Just imagine the possibilities. An audience that already resonates with a particular worldview, now able to put their money where their convictions lie, all via an ETF that might be heavily publicized across the sponsor's own channels. Some might call it genius marketing. Others might call it an unsettling blend of personal influence and finance. But almost everyone agrees it is something new and unprecedented, with the potential to morph traditional notions of campaign finance, political activism, and investment strategies all at once. In fairness, it is not as if nobody has tried to launch a Bitcoin ETF in the United States before. Many well-known asset managers have marched to the Commission's door. A few were eventually greenlit to launch Bitcoin futures-based products, though pure spot-based ETFs still stir intense debate. Ethereum-based ETFs, too, loom on the horizon, with the Commission taking baby steps to consider them. So, the Trump media angle is not that it is trying something brand new in terms of structure. Rather, it is the synergy among the sponsor's identity, the combination of Bitcoin and Ethereum in a single product, and the bold America First marketing that sets this proposal apart from others on the Commission's roster. What remains equally fascinating is how the sponsor is strategically addressing investor protection, the crux of the Commission's concerns. The official documents highlight how the ETF's design aims to guard against fraud and manipulation. This involves robust market surveillance agreements, transparent custody solutions, and an established exchange rulebook that sets trading standards. The New York Stock Exchange, for its part, is no novice when it comes to navigating regulatory complexities. Its brand strength alone could calm any potential jitters among institutional traders, but the presence of a polarizing sponsor means scrutiny will be at an all-time high. Will brand identity overshadow robust risk management systems, or can they truly harmonize to open the gates for a new wave of mainstream crypto adoption? Lest we think the entire future of this initiative is guaranteed, it is essential to remember how quickly sentiment can shift. If the Commission or even broader political pressures weigh in against the listing, the plan might stall indefinitely. From the outside, it is hard to gauge how regulators might respond to a sponsor with strong ties to a political figure. Do they treat it like any other application? Is the sponsor's history with controversies a complicating factor? And how will the average American investor respond? While part of the public sees the rise of crypto as unstoppable, another segment remains wary, especially when the product carries a stamp of approval from a political identity they may or may not trust. Adding another layer of intrigue is the possibility that, if approved, this ETF might unlock a flurry of competing proposals. After all, success in the crypto arena often breeds imitation. If a Trump-backed Bitcoin and Ethereum fund secures the Commission's blessing, you can bet other entrepreneurs, perhaps aligned with different ideological persuasions, will take note. They, too, might want to harness the power of their brand in synergy with the unstoppable momentum of digital currencies. We could envision a future in which multiple ideologically charged crypto products vie for a share of the investor pie, turning what used to be a financially driven sector into something more akin to a new battleground for hearts, minds, and wallets. Now, I know what you are thinking. Is the potential payoff worthy of navigating these treacherous waters, or is it all hype? The answer may partly lie in the extraordinary wave of institutional attention that has steadily built around Bitcoin and Ethereum. These two assets have soared in valuation and mainstream acceptance over the past few years, culminating in repeated headlines about major banks opening crypto desks and high-profile business figures endorsing digital currencies. By merging the gravitas of the New York Stock Exchange with the iconic name behind Trump Media and Technology Group, one invests in more than just a simple financial instrument. It becomes a cultural artifact, a statement piece. That intangible but potent factor might explain why curiosity about this prospective ETF is off the charts. Speaking of off the charts, let us also remember that the crypto market, for all its potential, remains prone to roller coaster volatility. The text references how Bitcoin's price can plummet thousands of dollars in mere hours, only to rebound with uncanny speed. That environment can be thrilling for speculators, but terrifying for conservative investors who prefer stable, predictable returns. Yet the growing existence of ETFs could draw in a new tier of investors, the ones who had dabbled in the stock market but avoided standalone crypto accounts due to concerns about custodianship, hacking risks, or regulatory gray areas. For that crowd, an ETF might serve as the perfect gateway, a regulated product widely accessible through standard brokerage platforms that offers an opportunity to ride the crypto wave without delving into the complexities of private keys and decentralized exchanges. Now, let us drop our second gentle nudge. If you have been gripped by the twists and turns of this story, and you want to keep up with every new angle that emerges as regulators mull over this monumental proposal, consider subscribing or following. That way, you will not miss the next chapter in this riveting saga, especially if the Securities and Exchange Commission decides to clue us in on any new developments. We deeply appreciate every bit of engagement from our community, and together we can keep decoding the mysteries of cutting-edge finance. But let us keep going. Speculation runs rampant about the aggressiveness with which the exchange might market this ETF if it secures the green light. The synergy among Truth Social promotions, potential appearances by the big names behind the sponsor, and the general fascination with cryptocurrencies might produce a breathtaking campaign. Could it overshadow competing crypto funds? Possibly. The sponsor's ability to generate headlines is practically unmatched, so the dynamics of competition in the crypto ETF arena could shift overnight. Simultaneously, global watchers are taking note. Approval of an ETF that merges Bitcoin and Ethereum in a high-profile manner within the United States might resonate worldwide. Other stock exchanges and regulators could be inspired or alarmed by the success of a product that openly taps into nationalist branding and political ties. Different countries maintain different stances on how open they are to crypto-based funds, so a wave of new proposals might soon flood foreign jurisdictions as well, either imitating or seeking to surpass the model established in America. Beyond the hype, it is also important to consider the role of stablecoins and other digital tokens in the sponsor's roadmap. The text references potential future product expansions, possibly including an America First stablecoin income fund, which stirs additional questions. Stablecoins have come under intense regulatory scrutiny for their peg to fiat currency, their reserves, and their potential to disrupt conventional banking. If the sponsor effectively normalizes these products under the patriotic umbrella, that might encourage new waves of adoption among investors who, until now, have regarded stablecoins skeptically. We might see an explosion of stablecoin-based yield products, each advertised as a lower volatility on-ramp to the crypto space. Still, lurking in the background is the unstoppable question of whether this entire movement is, in fact, the unstoppable wave of the future, or a precarious bubble teetering on the edge. Detractors warn that the crypto euphoria has soared too high, propped up by flashy headlines and a relentless flow of hype. Proponents counter with evidence of real-world use cases, from money transfers to decentralized finance applications that are rapidly displacing older, slower financial methods. The proposed Trump Media ETF is at the intersection of that debate, symbolic of the transformation of crypto from a rebellious niche technology into a mainstream financial instrument integrated into the social and political fabric. Whether you view this story as a testament to the unstoppable nature of digital innovation or as a cautionary tale about the blending of politics and finance, there is one thing we can all agree on. The next few months promise to be absolutely riveting. The Securities and Exchange Commission will scrutinize everything from the daily trading volumes of Bitcoin and Ethereum to the sponsor's operational reliability. The sponsor, in turn, will tout the robust security measures and the unstoppable wave of interest from potential investors. Meanwhile, the public, some cheering, some shaking their heads, will watch to see if this becomes the watershed moment that redefines how we invest in digital currencies, or simply the latest headline in an unending saga of bold claims and bigger-than-life personalities. If the Commission grants the seal of approval, the launch itself is likely to be a media spectacle. Expect the opening bell to be rung with fanfare, possibly with a few pithy sound bites from individuals connected to the sponsor or the exchange. The flood of buy orders or the immediate critical commentary from market analysts could become the new front page. And if, by chance, the Commission rejects the proposal, expect no shortage of dramatic fallout and speculation over whether political factors influence the decision. Either way, we are in for a wild ride. In the grand scheme of things, though, this saga is bigger than any one person, product, or regulatory agency. It stands at the crossroads of technology, policy, finance, and media, forming an unparalleled tapestry in modern economic history. And it hints at a future in which cryptocurrencies evolve from an esoteric niche into an integral part of global commerce, brand building, and yes, even political expression. Only time will tell if that future is built on a solid foundation of regulatory compliance and thoughtful oversight, or if the watchful eye of regulators will eventually clamp down on the more speculative fringes of this new frontier. In closing, keep your eyes peeled for the next volley of announcements, because the story is far from over. Whether you consider yourself a crypto enthusiast, a traditionalist who prefers the stability of established markets, or simply an intrigued observer marveling at the spectacle, there is no denying that the wave of digital asset proposals surging toward mainstream acceptance has gained unstoppable momentum. The New York Stock Exchange's application to list a Trump media and technology group, Bitcoin and Ethereum ETF, exemplifies the transformations rippling across the landscape. More than just a curiosity, it could represent one of those rare pivot points in financial history, a moment when everything changes in ways both thrilling and unforeseen. For now, let us keep watch as regulators deliberate, as big names at the sponsors organization drop hints of bigger ventures to come, and as the global crypto market continues to operate with unpredictable energy. In a world where digital asset innovation shows no signs of slowing down, the next big move might arrive sooner than any of us expect, upending our understanding of how money, media, and technology intersect. Stay tuned. This story is only just beginning.